Hello and a very warm welcome to Money Control. The morning after the big splash of numbers that were released yesterday, the GDP numbers that came out yesterday threw a whole bunch of surprises. Well, most importantly first, it was the last set of data, a sort of a report card, an economic report card of Modi government's performance before we go in for elections. So that was what was behind all the anticipation and excitement around the numbers. There was a sense that growth could slow down because that's what the economists were expecting. But this number that has come out yesterday will set the economic narrative of the government as campaigning begins in full steam ahead of general elections. What's striking about the GDP data is the stupendous growth number for the third quarter of FY24, which came in at 8.4%, above nearly all expectations. This is following on 2 quarters of 8.2 and 8.1% growth for the year so far. So what is the India story looking like? How are economists interpreting these numbers? What are the trends that have emerged? I have with me very impartial observers of the Indian economy to break down the numbers for us. These numbers are heavily political simply because of the timing, and we have with us people who will break down these numbers for us and give you a very objective assessment. Well, please welcome Aditi Nair from ICRA. We have Mr. D.K. Srivastav from EY India and Vishruth Rana from S&P Global. Aditi, let me begin with you first. A long night yesterday, I believe. No one was expecting these numbers, especially the economists, because from a poll that we had conducted, the assessment was between 6.5 to some 7% But this number seems to have stumped many. How are you reading into it?
Thanks, Shweta. I can't recall when we last had such a perplexing set of GDP and GVA numbers. So we've got this divergence that has come in. We've got GDP growth getting revised upward to above 8% for Q1 and Q2 and accelerating further to 8.4% in Q3. But the GVA data has come in line broadly with what most economists were expecting, that we're going to get a slowdown in growth from H1 to Q3. And the GVA growth has slowed down to about 6.5% in that quarter. So firstly, we have this divergence of one metric accelerating, another metric decelerating. And we have this very wide gap which is built up between the GDP growth and the GVA growth for Q3, almost 200 basis points. And this is because of another metric which comes in the middle of the GDP and the GVA number called net indirect taxes, which is effectively taxes less subsidies. And because subsidies appear to have contracted in that quarter, this metric has grown by 32%, leading to this very wide divergence between the GDP and the GVA growth number. And that clearly is not something that can sustain going ahead.
Thanks for that, Aditi. Let me go across to Vishruth. Vishruth, IMF has called India the star performer. How are you reading into these numbers? Are you looking at the GDP number or the GVA growth number as you look at the Indian economy?
Yeah, no, thanks for that. And so I think in line with what Aditi said, the truth probably lies somewhere in between. And we definitely look at both numbers in terms of assessing the medium-term outlook of the economy. Quarterly variation for us is probably not such a big factor in terms of determining the growth path of the economy. I think it is a solid growth number overall. If we look at the 6.5% on the GVA side or the 8+% on the expenditure side, so the Indian economy continues to perform pretty strongly. I think the medium-term fundamentals are in place. We expect strong consumption growth, growing middle class. There's still strong investment on the infrastructure side, which is going to boost the capital formation side and the potential growth of the economy going forward. So really for us, from a medium-term perspective, this is in line with our expectations, and we expect fairly strong performance over the next couple of years from Indian economy.
All right, that's a very optimistic take on the Indian economy. Mr. Srivastav, let me come across to you. Are you as exuberant about the numbers, or are you looking at them with a little bit of trepidation?
Well, I think it is better to look both at the positive and the negative news content of these sets of numbers. Starting with negative, the weakest part still appears to be consumption growth. If we look at the annual growth numbers in terms of growth of private final consumption expenditure and government final consumption expenditure both, these are growing at 3% annually for 23, 24. And this is particularly with respect to private final consumption expenditure. It indicates a certain weakness. This was in some sense partially neutralized by an improvement in the negative contribution of net exports, which in the first advanced estimates was more than negative 3%, but now that has come down to minus 2.3%. So, but it is still negative, and therefore the weak parts are consumption growth, particularly private final consumption growth, and the continued status of negative contribution of the net export. Given that, I think the positive news is that investment growth is the one, domestic investment growth, which is driving the economy. And that is particularly led by government sector investment growth, which they are focusing on infrastructure, which is actually going to lay the foundations for medium to long-term growth.
Right. I want to bring in Aditi on this. Aditi, so investment growth is what seems to have really worked for the India story so far. However, having said that, now the whole strategy behind crowding in private investment, has that worked out?
See, Shweta, this is part of what is still perplexing me. We know from the government data, from the provisional data, that Government of India and the state government's capex growth, in terms of the growth, slowed down quite sharply between Q2 and Q3. And that's not something which is coming across in the data that we got from the GFCF side. The moderation in growth is very mild between these two quarters for the gross fixed capital formation, whereas government capital expenditure slowed down much more sharply between these two quarters. I am constantly asked when private sector capex is going to come back. So I cannot say that private sector capex filled in the gap so strongly in this quarter for these numbers to really be this strong, that we had double-digit investment growth in Q3, even though government capex was slowing down because private sector capex was so strong in that quarter. I'm afraid there are going to be some revisions in this data. I don't believe that private sector capex is non-existent by any means. I think it's there. It's muted and it's at a more realistic kind of pace. But I don't think it accelerated to make these numbers appear appropriate for Q3. So, there is a very large discrepancy component, which is kind of creeping into many of the data puzzles that we have for Q3. For instance, if we look at the headline GDP growth number accelerating between FY23 and FY24, almost every expenditure component has actually slowed down between these 2 years, as per the data we got yesterday. So a lot of the answer lies in the discrepancy number. Secondly, if we look at the upward revision in the advanced estimate for FY24's growth that we got yesterday compared to the first one that we got a few weeks back, there again, most of the components growth is now shown to be slower. So again, we have this discrepancy component which is at play. So it's hard to really kind of explain the numbers until the discrepancy number is going to be much smaller and get reallocated between the different components. Unfortunately, I do suspect we're in for quite a lot of revisions, both in the May data and in the subsequent data that we will get in the following year. So it may be a while before we can really make sense of some of these data puzzles.
Right. Vishrut, I'd like you to come in on this. Are these discrepancies as perplexing to you as well? How are you reading into the investment number, for instance? Like Aditi pointed out, that while we're seeing government investment pick up, we've not really been able to crowd in private investment. Is that something that's concerning to you?
Yeah, so there's I think a couple of elements to the story. I think one thing that Aditi touched on is the large contribution of the discrepancies in terms of the overall growth number. If you look at the expenditure breakdown, consumption growth, private consumption growth is at about 3.5%, which would be a very slow growth for the consumer-driven economy that India is. So definitely some issues on the statistical side in terms of getting the breakdown correctly assessed across the components. On the infrastructure and the fixed capital formation side, we do see corporate balance sheets have become quite healthy over the past year or so. This is not really translated into strong capex as of yet, as we've been discussing. It's something that we're likely to see in the pipeline going forward. If the economic momentum continues, we think that aspect of the story will come in once monetary policy eases. Corporate balance sheets are geared for that at the moment as well. So that is something that we anticipate. One other thing I wanted to bring in is also the nominal side. So over the past couple of fiscal years, what we've seen is very strong nominal growth driven by very strong deflator growth as well. Now over the past fiscal, we're seeing the deflator growth come back down. So the nominal push is not as strong as it was in the previous fiscal year. So for example, the deflator growth is just 1.6% in the past quarter, which is quite low. The number tends to be between 3.5 and 4. So that is going to be a headwind for nominal GDP growth over the next couple of quarters before that washes out of the data. So that is something that we're watching out for as well.
Okay, let me come across to you, Mr. Srivastav. I just want to talk about the manufacturing story. Now, if you look at the growth numbers for the third quarter, 11.6% growth, which is quite a bump up from the contraction of 1.4% in the comparable quarter of the previous year. Construction has also done well at 9.5%. Clearly a reinforcement of the government's push on infrastructure. Having said that, yesterday we also got the core sector data, which came in at a 15-month low of 3.6%. So how do we understand these numbers? You look at manufacturing, you look at construction, and then you look at core sector growth declining.
Yeah, as far as the output side is concerned, except agriculture, almost all non-agricultural sectors have done very well. We are looking at the annual data for 23-24, and of course, quarterly data is even better. But even for annual data, 8.5% growth in manufacturing appears to be very robust. If we combine this with the corporate tax revenue data, that is indicative that the corporate sector health appears to be very robust because they are sitting on profits and contributing relatively more to taxes rather than taking in additional investment. So the economy seems to be poised for shifting slowly away from dependence on government's contribution to infrastructure and capital expenditure growth. And capacity is there for the private corporate sector now to take up the burden and augment investment. Now, as far as investment is concerned, overall investment rate in real terms has crossed 30%. In nominal terms has crossed 30%, but in real terms it is close to 35%. And that difference between real and nominal is to be explained in terms of the differential deflators that attend upon consumption goods vis-a-vis capital goods. Apparently, capital goods inflation is much lower compared to overall inflation, and therefore this discrepancy is there that real, in terms of nominal investment rate, it is 30.2% or so, but it is translating nearly 5 percentage points higher. And that is the one that can explain the overall growth performance. So I think even though there are certain weaknesses that we are continuing with, But the economy seems to be poised to maintain a robust growth as we go along.
Okay, Aditi, if I could, bring you in on this. Now, we heard Mr. Srivastava say that the economy is poised to grow from strength to strength. You look at manufacturing, that's done very well, but agricultural growth has declined quite substantially. Do you see that weighing down the India story in the next quarter and for the year?
So, Shweta, certainly, I mean, even the data that we got yesterday on the advanced estimates for crop production isn't that great. And Rabi sowing only caught up with last year's level very late in the season. So, the sense that I have is that rural demand is going to remain cautious for about 3 more quarters. If we end up with a good monsoon, which is what we're all hoping for, and if the outlook for the next Kharif crop is healthy, then we could really expect to see a meaningful pickup in rural demand only after that. And that's going to be H2 of FY25. So from the agri and the rural sector, I'm afraid we're probably in for 3 more quarters of very, very tepid readings. And if we back calculate the number for agricultural output for Q4 of FY24 based on the data that we got yesterday, there again, the NSO is implicitly indicating a contraction. Then you talked about the core sector data, which certainly came in quite subdued yesterday. And also, when we look at Government of India's fiscal data that we got for the month of January yesterday, in that month, revenue and capital expenditure contracted as well. So I'm afraid we're not kicking off Q4 with a whole lot of very positive numbers, at least on these counts. Some of the other high frequency indicators had provided a better picture, but certainly the data that we got yesterday for government's expenditure and for the core sector has not been that positive.
Right. Let me go across to Vishruth here. Vishruth, we've had a tumultuous year globally speaking. We've had the Red Sea crisis. We have a war that continues unabated. So clearly, economies across the world have been impacted by this. What's your sense on the impact on India? Because if you look at the numbers that came out yesterday and until now, whatever export trade data that we've got, it does seem like India has been somewhat cushioned from the impact for various reasons, and India's decision to take oil from Russia and so on might have it has worked in India's favor. I just want to get a sense from you on what kind of an impact do you see of what's happening around the world on the India story?
Yeah, that's absolutely a key watch point, I think, for the Indian economy, for the Asia Pacific region as a whole. I think there's a few global developments that are really key and that are really affecting or will be affecting the Indian economy in the coming quarters. So one of them is, as you mentioned, the geopolitics, which is resulting in supply chain disruptions as well as inflation. The energy prices are, of course, a critical angle for the current account and for energy price inflation as well. The other factor that we're watching very closely is the Federal Reserve, which is going to determine the path of global interest rates and monetary policy, especially for external financing, and will probably affect financial conditions in the region as well. So US inflation has been on the high side, and it means that we expect the Fed to be on hold for longer. And this means that there will be capital flow pressures out of Asia Pacific, out of India. While that remains the case, the Reserve Bank of India is, of course, signaled that it's going to be very cautious in terms of cutting interest rates, which we do anticipate towards the end of the first half of calendar 2024. So if inflation momentum continues to ease as it has been over the past few months, but there will definitely be one eye on what's happening on the global interest rate side, which will determine capital flow pressures, the path of the rupee, all of which will be quite critical for the economy going forward.
Let me come across to you, Mr. Srivastava. For the fourth quarter, you raised a concern that the growth could actually slow down quite a bit. Now, we have elections coming in, and we as we go into, as the government, as we bring in a new government in the month of May, what are the key issues that you think that the new government will inherit
Well, the
in,
fourth
in terms of macroeconomy?
yes. The fourth quarter growth, if we take the annual growth and we take the 3 quarters growth data that are available, the fourth quarter growth would be close to 5.9% or so. So having maintained more than 8% for 3 quarters, now a sudden shift to 5.9, that's a fall of more than 2 percentage points in 1 quarter.
Yeah.
It's, I think, one of the intriguing parts of the message that has come out yesterday, because there is no sign, external sign, as to what is the additional weakness for this quarter as compared to the earlier quarters. So I expect that this data would get revised. Possibly a good part of this explanation may be in terms of the base effects that are implicit there. But on the whole, I think the fourth quarter would do better, possibly when these data sets get revised again. And some of the earlier 3 quarters might get revised downwards, and fourth quarter may be revised upwards. But in terms of the advantage that the Indian economy now has as compared to the major economies in the world, I think that now that we are maintaining on a consistent basis more than 100% growth as compared to the global average, and we are showing that it looks like sustainable in the medium term, even in terms of IMF forecasts and so on. It should be able, therefore, to direct a good part of foreign direct investment into India. And therefore, apart from the fact that we are still vulnerable in terms of the negative contribution of net exports, I think in the capital inflow into India is likely to improve as we go along. Of course, all this is very sensitive to interest rate movements.
Right. Aditi, your take on the fourth quarter and the kind of challenges or the advantages that the new government will inherit when they come into power. So we will probably have a new government when the next set of data comes out in the end of May.
So, Shweta, my sense is that fourth quarter growth is going to be significantly slower than these 8% plus GDP prints that we got yesterday for Q1, Q2, Q3. As far as the GVA is concerned, so Mr. Srivastava talked about the implicit Q4 GDP growth number being 5.9%. The implicit Q4 GVA growth number is closer to 5.4%, so it's even lower. Now, I think that's pretty close to the number that we had before yesterday's data came out. So I'm going to say that that's looking probably pretty appropriate right now. I agree that there is likely to be some amount of rebalancing in the growth numbers between the various quarters and also between the different components. So we're probably in for a lot of revisions. As far as the new government coming in is concerned, in general, the bigger kind of policy questions are going to remain. What do we do to spur more infrastructure, faster infrastructure activity, crowd in more of the private sector investment activity, create enough jobs so that people are going to be entering the workforce, and over the next few years, refocus on fiscal consolidation, which means that we will also have to focus on compressing the revenue deficit further. Other than that, I think the big question is how is the RBI going to interpret this data? Is it a slowdown or is growth really above 8% for 3 years? Because I think that will have some implications for when the Monetary Policy Committee feels that it's appropriate to start cutting rates.
All right. Let me come across to you, Vishrut, for your final concluding comments on this. How is the world looking at India right now? We heard Mr. Srivastava saying that he expects more foreign inflows coming in. Considering how the world economies are faring at the moment, how are you looking at India as an investment destination?
Yeah, so India definitely stands out as a high growth economy in the current landscape, and we certainly see a lot of investor interest, enthusiasm regarding the economic prospects of the Indian economy going forward. There's a couple of factors I should talk about in the medium run, something Mr. Srivastava and Aditya were also talking about in terms of the priorities, but how something that could be also relevant for foreign direct investment is the business climate is something that's going to be very critical for investors, something they're watching very closely. There are, of course, longer term challenges as well with the energy transition and climate resilience, right? Being prepared for these changes that are happening that are also quite key for the long term potential of the economy. So that's also another thing on the minds of investors. One other point I wanted to talk about is the global trade environment is also something that we're watching quite closely, and something that investors are looking at as well, which is gradually improving, but the global growth environment is still looking a little bit subdued. So when we place India's plus 6% growth number against that backdrop, it's certainly an attractive proposition for investors.
Okay, I just want to ask a follow-up question to what you just mentioned on, how India continues to have a lot of interest, but the business climate, the whole, the sentiment needs to remain upbeat. Anything that you think that the Indian government should focus on to ensure that the optimism actually translates into investments coming into the country, and how much of that optimism is driven by the election outcomes, and what is the world investor community expecting India to vote like?
So I think that's probably not central to the question. I think the policy apparatus, the economic policy apparatus, is probably more important for driving investment decisions for investors. And it's just the usual tick boxes. I think they apply to India. They apply everywhere across the world where investors are active. The predictability of the regulatory climate, infrastructure needs are all very critical things, and it's something that has been improving in India over the past several years. So something that's likely to proceed along the way, but it certainly remains a watch point for investors when they make their, I think, decisions. Yeah.
Sure. So very quickly, what's your estimate for India for the year FY24?
So we currently have penciled in 6.5% growth. We don't revise these numbers very frequently, so we do it on a quarterly cycle. So we're likely to have some upside risk to that number when we take a look at it again.
Okay, Mr. Srivastava, your take on FY24?
FY24, I think we'll be close to 7.5% or so.
7.5. Okay, and Aditi?
So, Shweta, I'm going to say that the GVA number for the full year that the NSO put out yesterday, I think that's the number that we should work with for the time, not the GDP number.
All right. Okay, thank you so much for breaking down these numbers for us. A lot of excitement and a lot of confusion. So thanks for clearing some of that fog for us. And of course, we'll keep tracking this story on Money Control. Stay tuned. Thanks so much for watching.